Darren Sharinga, MLPs have been trading down over the past week. What's behind the sell-off?
Greg, the sell-off has really been driven by the concern over what's going to go on with tax rates in 2013. So it's either investors that are locking in capital gains rates at 15% this year, or saying what's going to happen with my dividend income if rates go from 15% to 39.6% next year.
Well, if tax rates rise, do I want to be in MLPs?
Absolutely. MLPs provide a tax shield. So if you look at the problem today is if you're making $1,000 after tax and dividend income, you would only have $700 in a new tax regime. With MLPs, 80% of your income is tax deferred. So that same $1,000 would only drop to $990. Tremendous difference.
All right, one MLP you like quite a bit is Inergy. They have operations in the Marcellus Shale. Why do you like this one?
Well, Inergy is a company that has gone through transformation right now. And what has happened, it is a pure play on a midstream operations, which means pipelines. It's a general partner, which is benefits from faster growth rates. And right now, it's a value play. It's trading at a discount relative to its peer group. So we expect that it'll have faster growth and multiple expansion, which will drive superior returns.
Staying in the Marcellus Shale, you also like Legacy Pipelines. What's special about this one?
Legacy is an exploration and production company. I think MLPs are really production companies. They are looking to produce consistent distributions over time, whether they're drilling for gas or oil. And so Legacy, again, is undervalued relative to its peer group. It just did an acquisition that was accretive that increased its reserves by 25%. And so we again see that this is a company that has better growth prospects. Higher yield is over 10% right now, and it's a way of hedging yourself against higher prices at the pump.
Finally, a lot of people are worried about fracking in these areas like the Marcellus Shale and the Bakken Shale. Will any of the pipeline companies become embroiled if there's a problem with fracking?
I can't see it because they're so far removed. They provide toll roads. They are transportation from the wellhead to the end user. So if there was a problem, it would be more of your exploration and production companies, your large integrated oil companies. That's where more of the problem would run into. But on fracking, it generally hasn't been shown to cause any more difficulties than regular drilling. It's a question of how well it's encased, as you're pulling the oil or natural gas out of the ground. So I think there's a lot of concern over fracking. I'm not sure it's well founded on facts.